Welcome back to another Ater video. Now today I'm going over possible price action. Now I'm sorry if I haven't uploaded in a little bit. I didn't have a software to chart up on. I just got used to this one. Yeah, this is just a potential theory of Elliott wave and just where we can see the price action go. Because nothing much has really changed. Like, this looks quite advanced, but to be honest, this could be just a double bottom and it could just play out like a normal double bottom. But I'm going to go into like a kind of deeper analysis on what could potentially happen. Now, to start off, what is Elliott wave? Elliott wave is a pattern that kind of looks like this. You have 1, 2, 3, 4, 5. Usually 3 is the biggest wave, but in some cases it's not. And you have an ABC correction. Now if we come over, where's the chart? Over here. We've got this 1, 2, 3, 4, 5. A, B, C. Now if you're familiar with Elliott wave, you might realize that these touch. Now, according to Elliott wave like 1 and 4, they can't touch. And same goes with like any other wave, they can't touch each other. Now, there are sometimes there can be exemptions. Now, this is it's a key level, like the spring, or candle wicks. Some people don't count candle wicks. Now, this is just a theory, and even if this isn't an Elliott wave, it doesn't matter because it's kind of in the past. Now, we've got 1, 2, 3, 4, 5. 5 being our largest move. Now, keep that in mind. We've got A, B, C correction. A, B, C. And we could possibly break down from this key level, which is around 423, and come down to this last point of resistance, which is quite strong, which is about 393, which is our spring. Now, if we don't come down to this, it's possible that we just bounce off the key level and we just play out like a typical double bottom. We could Elliott wave from there, 1, 2, 3, 4, 5, but it doesn't really matter as much as the ABC correction would have. We have already gone up quite a bit in the after hours as well. So we can either come down to the spring, finish our C, and the reason this could work out, right, if we read over here, I've got it right here, and also double bottom over here, if you guys didn't know what that is, kind of like a W. Yeah, I'm just going to read this out to you. Potential way Elliott wave could play out. I've already read that part to you. This is a rough example of a micro/similar pattern that could play out, leading us to $8. I'm entering at 422 and 392 and I have no exit strategy until earnings. I would enter 75% at 422 and 25% at 392 because the hype around earnings is bullish and we have gapped up a nice bit in after hours. We also have a ton of FTDs. Theoretically, we gap down market open with fear of earnings/previous sell-offs to the spring and make a strong rebound after earnings on Tuesday, as earnings are not announced until after market close on Monday. It's very important that you guys realize earnings are after market close on Monday. So a lot of people could be scared or a lot of people could be bullish. It's one of those times where no one can really predict what's going to happen. So just look out for this. Just an example of an Elliott wave could go in a lot of different places. Like, this might not be the way that Elliott waves plays out, but it's just like kind of like a rough idea of what could happen. Now, this might not ever happen, might just come here, which we've already bounced off kind of. It might just be bouncing off of this and play out into this type of Elliott wave. But the main thing is our target is measured from, forgot to say this, our target is measured from the price range, 41% of this double bottom, and put on top of where we would break out of the neckline, which is where it like doubled out, or touched out, which would bring us right to $8.06. What's the $8.06? Key resistance, which is kind of like the perfect place for it to lead us to see what's going to happen next. That's pretty much it. We'll see what's happening. I'm bullish this week. I'm bullish Tuesday. I don't know what's going to happen Monday, but I do feel like we're going to get back into the $5 pretty quick. And really quickly, if you guys just want to realize, if you guys want to see how I measured this out, this is from key resistance down here up into the supply zone, down to a Fibonacci retracement of 618, which is the most reliable Fibonacci retracement from the run-up, and then up into the neckline of the double bottom, down into the top of the supply zone, and then up from the trading range of the W pattern. That's it for this video, and yeah, see you guys in the next one. Make sure to like and subscribe.